All right, so that's the commentary from Prime Minister Narendra Modi and his UK counterpart Keir Starmer. But moving on, let's also talk about India and UK ties. Now, both the countries have signed terms of reference to reposition the Joint Economic and Trade Committee during the meeting between PM Modi and UK PM Keir Starmer in Mumbai yesterday. The terms of reference seek to push forward the India-UK Comprehensive Economic and Trade Agreement, or CETA, that was signed earlier in July 2025. Now, these opportunities waiting to be seized under the India-UK FTA are unparalleled. That's the word coming from British Prime Minister Keir Starmer as he kick-started his first visit to India after assuming the charge of the top office. He says, and I quote, "The path-breaking India-UK CETA will create new job opportunities for youth, expand trade and benefit both our industries as well as consumers." That's the word coming from Prime Minister Narendra Modi on India-UK Comprehensive Economic and Trade Agreement that was signed earlier in July. Now, in fact, to get us more details on what this really means, what kind of opportunities are going to be generated, we'll now take it across to Sumita, who's standing by with the detailed report.
That's right. Keir Starmer is facing challenges in domestic front when it comes to a slowing economy, which is also faced with the uncertainty around Trump's tariffs and other policies, and which is what exactly defines why the UK got here a delegation of over 120 influential business people, which is essentially to explore ways for a growth and how growth can be unlocked for the UK's economy. And in fact, it's in this backdrop that the operationalization of the CETA agreement or the FTA agreement between India and the United Kingdom becomes important for the UK. Now, both the Prime Ministers in this regard welcome the resetting of the Joint Economic and Trade Committee or JETCO roadmap. This is essentially to operationalize and implement the CETA, which provides for duty elimination of tariffs on approximately 99% of tariff lines and covers nearly 100% of trade value. It also, in fact, both the sides also did speak about, as far as the outcomes of this meeting between the Prime Minister and UK PM Keir Starmer were concerned. That includes opening up of 9 leading UK universities in India. Both the sides also reiterated their commitment to enhancing cooperation in the aviation sector, which essentially also includes the renewal of India-UK Air Services Agreement. Both sides will also build concrete partnerships to strengthen and diversify critical mineral supply chains. Well, on the defense side as well, PM Starmer made a special emphasis on defense other than AI and education. And of course, both the countries are looking at cooperation in developing maritime electric propulsion systems for Indian naval platforms. And in fact, an initial supply of lightweight multi-role missile systems, that deal is pegged at £350 million. In fact, other than these deals, there was a condemnation that came in from Keir Starmer in all its forms and manifestations. The UK also reiterated its long-standing support for India's legitimate aspirations for a permanent membership in a reformed UNSC. In fact, in terms of mobility, both sides will continue to implement the migration and mobility partnership, while a commitment was made to curb illegal or irregular migration.
Well, thank you so much, Sumita, for getting us all those details. But after holding the talks, both the PMs delivered a joint address where PM Modi put the spotlight on India and UK's shared values. He also announced that 9 UK universities would be opening their colleges in India. Let's go across and listen in.
भारत और यूके के बीच टेक्नोलॉजी पार्टनरशिप में अपार संभावनाएं हैं। हम यूके की इंडस्ट्रियल एक्सपर्टाइज R&D को भारत के टैलेंट और स्केल के साथ जोड़ने पर काम कर रहे हैं। दोनों देशों की युवा पीढ़ी को इनोवेशन इस ब्रिज से जोड़ने के लिए हमने कनेक्टिविटी और इनोवेशन सेंटर, ज्वाइंट AI रिसर्च सेंटर जैसे कई कदम उठाए हैं। हमने क्रिटिकल मिनरल्स पर सहयोग के लिए एक इंडस्ट्री गिल्ड और सप्लाई चेन ऑब्जर्वेटरी की स्थापना का निर्णय लिया है। रक्षा और सुरक्षा से लेकर एजुकेशन और इनोवेशन तक भारत और यूके के रिश्तों में नए आयाम घड़े जा रहे हैं। आज प्रधानमंत्री स्टार्मर के साथ शिक्षा क्षेत्र का अब तक का सबसे बड़ा और प्रभावशाली प्रतिनिधिमंडल आया है। यह बहुत खुशी की बात है कि अब यूके की 9 यूनिवर्सिटीज भारत में कैंपस खोलने जा रही है।
We're creating a new, modern partnership focused on the future and on winning the opportunities that it offers, and we're doing it together. And that's why we struck the UK-India Comprehensive Economic and Trade Agreement in July, a breakthrough moment, years in the making. I expect that we will have secured major new investments, creating thousands of high-skilled jobs in the sectors of the future for both of our nations. The UK and India stand side by side as global leaders in tech and innovation.
All right, so those are the comments coming from Prime Minister Narendra Modi and his UK counterpart. But moving on, Hungarian writer Laszlo Krasznahorkai, whose philosophical yet funny novels often unfold in single sentences, won the Nobel Prize in Literature for his compelling and visionary oeuvre. Now, the Literature Prize has been awarded by the Nobel Committee of the Swedish Academy 1 month 7 times, 117 times, I beg your pardon, to a total of 120 winners. The Literature Prize is the fourth to be announced this week following the 2025 Nobels in Medicine, Physics and Chemistry.
All right, but with this, fears, it's time now to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
Hi there, welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Time now to take a look at how the Asia-Pacific markets have opened up, and they're largely opened in the red, tracking the Wall Street losses that we saw overnight. First up, let's take a look at Japan's Nikkei. That's trading in the red. It's down about 8.7% at that 48,240 level, 230 odd level now. That's down about nearly 350 points. Now, Australia's ASX 200 index, that's the one that's trading absolutely flat right now, just about 0.1% lower at that 8,960 mark. So yes, trading in the red, but absolutely flat, not major moves coming in there. But apart from that, China's Shanghai index, that's also trading in the red. It has opened up after the holidays that it has opened up after a market holiday, and it is trading about absolutely flat, but with a negative bias at the 3,929 odd level. Apart from that, it's only the South Korean Kospi index which is trading in the green right now. It's up nearly 2%. That's 1.8% to be precise at that 3,613 odd mark. So yes, that's about the Asian indices. Apart from that, there's also Hong Kong's Hang Seng index, which is trading more than 1% lower right now at that 26,400 odd level. So yes, that's Hong Kong's Hang Seng index for you, trading nearly 1% lower. So yes, that's about the Asian indices. But if we talk about the Nifty back home, we did manage to end on a high note. We ended above that 25,180 mark after we saw some recovery coming in towards the fag end of the session. So yes, we did manage to close lower. But if we look at what the Nifty Implied Open is suggesting for today, yet again a very muted start is what we are expecting, with a negative bias down about 16 points on the Nifty Implied Open. So yes, Srishti, very mild start to the day is what we are expecting for the D Street.
Indeed, Kanishka, but just yesterday, Nifty actually managed to close in the green, and that was interesting to see, and was trading near that 25,200 mark, while Nifty Bank also closed in the green near to that 56,200 mark, while Nifty Bank remains range-bound within the previous day range, led by Federal Bank and ITFC First Bank. It was the broader markets that also ended in the green with modest gains. Let me take it across to Snehi, who is joining us with the roundup of yesterday's market action. Snehi.
Expiry day was indeed a good day for the market. 0.5% uptick, in fact slightly more than that, is something that the Nifty saw, comfortably above 25,100 and very close to 25,200 is where the Nifty closed, 25,181 to be very precise. Similar moves on the sensex, a 400-point uptick coming in and a 0.5% uptick on that front as well. Nifty Bank slightly tempered, not in terms of the shade. It was in the green, of course, but slightly underperformed the benchmark. Still a 0.2% uptick coming in on Nifty Bank, wherein both private banks and PSU banks participated in whatever little up move we saw there. But the real winner or the real hero of the trading session discussion was the Nifty mid-cap basket. Almost a 1% uptick coming in and outperforming the benchmarks. Nifty small cap up 0.5% in tandem with what the benchmarks were doing. From the Nifty 50 group of stocks, it was a mix of stocks belonging to different sectors that led all the gains. You had JSW Steel, Tata Steel from metals, HCL Tech from IT, SBI Life, Sun Pharma, Ultratech, BEL, Cipla. So really defense, insurance, banking, so many sectors that led to this Nifty rally, and that was a good move coming in. On the flip side, select stocks only that closed in the red: Axis Bank, Titan and HDFC Bank. So if you take a look at the sectoral gainers and losers, it was the day of the metal stocks. A 2% uptick coming in on Nifty metal with names like Hindustan Copper, Hindustan Zinc, ZAIL, NMDC, all of them doing very well. This was followed by Nifty IT, so the cheer continued over there. Pharma, for pharma we had positive news wherein the tariff clarification came from the US that only specialty drugs fall under the tariffs ambit and generics are not under that basket. So positive momentum for some of the pharma names as well. So you had names like Lupin, Aurobindo Pharma, Sun Pharma, Laurus Labs, Cipla that all did exceptionally well in trade as well. In the last 30 minutes or so of trade, you had a very smart jump coming in from Nifty Auto from the red to the green and almost a 2/10 or a 3/10% uptick. We saw Nifty Auto as well, so very healthy move over there. So in terms of the pecking order, it was metal, IT, realty, PSU banks, energy. It was followed by FMCG, auto, Nifty Bank and Nifty Financial Services, all sectors closing in the positive territory. So that was the roundup of the kind of trading session we saw, and all eyes are going to be on what levels the Nifty can scale above 25,100 now going ahead, and where will it hold. So well, yes, all eyes are going to be on that.
All right, thank you, Snehi, for taking us through that entire market action roundup. But let's take a look at all the stocks that we need to keep on our radar today. And Ashesha is standing by with just that list. Ashesha, over to you. Good morning.
Good morning, and let's start off with the IT sector then. IT major TCS reported better than expected set of numbers. It was better than what the street was working with, and as far as total contract value or TCV wins are concerned, that came in at $10 billion in the quarter gone by versus $9.4 billion that the company had reported in the previous quarter. Management commentary with respect to deal wins for the second half of the year also continues to remain very positive, and it reported 0.8% constant currency growth on a sequential basis. So better than expected set of numbers. TCS and the entire IT sector for that matter will be in focus on the back of results that TCS has reported. Tata Elxsi meanwhile has reported mixed set of numbers. Revenue has been in line with what the street was working with, but margins, although they have expanded on a sequential basis, it has been lower than street expectations. So EBIT margins came in at 18.5%, which is an expansion of 30 basis points on a sequential basis, but lower than what the street was working with. Management meanwhile has guided for double-digit growth in FY27. Muted tech spends across automotive and media weighed on the earnings in the quarter gone by and will also continue to weigh on the near-term outlook for the company. So mixed set of numbers that Tata Elxsi has reported. The entire insurance pack will be in focus on the back of operational data that we got for the month and quarter gone by. ICICI Prudential in particular, where retail APE for the month of September saw an uptick of nearly 25% on a year-on-year basis, although new premium business growth was flat on a year-on-year basis, so we haven't seen any substantial improvement over there. Afcon Infrastructure meanwhile on the back of order wins, where the company said that they've won orders worth about 576 crore. This is for civil and allied infrastructure work. Positive development coming in for allied or for Afcon Infra. NTPC Green Energy meanwhile, its subsidiary has signed an MOU with the government of Gujarat, and this is for development of solar parks and projects with a cumulative capacity of 10 megawatt and wind capacity of about 5 gigawatt. So some order wins that have come in. NTPC Green Energy in focus on the back of that. Lastly, let's talk about Fortis Healthcare. Remember, this counter has been in focus for the last several trading sessions, and now SEBI has given its approval for open offers by IHH Healthcare, both for Fortis Healthcare and for Fortis Malhar Hospital. So on the back of this approval that has come in for the open offer, this has been a big overhang for the stock for the last several years, and now finally SEBI approval has come through, so keep an eye out on Fortis as well.
Right, thank you so much, Ashesha, for getting us all those details. But with this, let's also tell you which are the other counters that you should be watching out for. And first up is Hindustan Zinc. We have been talking about the great surge in the silver prices. At spot silver is above that $50 per ounce mark. Hindustan Zinc actually generates 20% of its revenue from silver. So we will be watching out for this counter. Subex is going to be another counter. A positive development, whereas the company received a new order win of $6.62 million from telecom operator in Netherlands. Ramco System will be in focus as well. A positive news flow as the company global engine maintenance order has been won. Aviation software for engine teardown operations to digitize the operations, improve the efficiency and compliance. The other counter is Railtel that we will be watching out for. A positive development as the company has received 18.2 crores of LOI from Karnataka Center for E-Governance. So a positive development for this particular counter. And within the pharma pack, all eyes will be on Natco Pharma as the company has received a nod to launch Risdiplam, which is actually used for treatment of neuromuscular disorder. This particular news flow is indeed positive as the company has received a go-ahead which will be priced at 15,900 rupees in India. And lastly, 5 Paisa Capital, a positive development, rather a negative development with respect to the operational updates. Income down 23% YOY, while the profit has declined over 50-odd%.
All right, then, Srishti, lots of stocks to track today. Let's see how that pans out. But on that note, we'll take a very short break. Be right back with more news and updates on the other side. Stories that we are tracking. Now, Prime Minister Narendra Modi said he spoke to US President Donald Trump, congratulating him on the success of the historic Gaza peace plan, which is a breakthrough deal signed by Israel and Hamas to end the 2-year conflict and begin the release of hostages and prisoners. The leaders also reviewed progress on the India-US trade talks, which have seen momentum despite formal negotiations being paused since August. Now, both sides have reaffirmed commitment to concluding the first phase of the bilateral trade agreement by November and agreed to stay in close touch in the coming weeks. So yes, Srishti, lots of developments as far as the US-India trade talks are concerned, and looks like November is the deadline that we should be watching out for.
Indeed, very positive commentary coming in over there, but interesting developments at the Tata Group as well, because Tata Trust board members are set to meet today amid the reports of rift over the governance and appointment issues. Anurag Joshi is here to give us more details on what this meet may entail. Anurag.
Tata Trust, that owns a majority equity stake in the holding company of India's biggest business group, is holding its board meeting amid a tense backdrop highlighted by factionism and infighting among the trustees. The acrimony among Tata trustees is growing ahead of the board meeting, and the two factions of trustees are set to tussle over the appointment of Tata Sons directors. The speculation is rife that the Tata Trust boardroom battle might impact the director appointments at Tata Sons in the future. This also comes on the heels of a very crucial meeting that Tata Trust Chairman Noel Tata, Tata Sons Chairman N. Chandrasekharan, Venu Srinivasan, who is a trustee, and also Darius Kambata, another trustee on the board of Tata Trustees, had with Home Minister Amit Shah and Finance Minister Nirmala Sitharaman a few days back. And the key contention among the two factions of the Tata Trust is that over the appointments of Tata Trust, and this usually happens through the nomination and remuneration committee of Tata Sons. And this rivalry, this infighting is because of the control over the appointment of new independent directors on the board of Tata Sons. The other key issue is the SP Group's exit, and Shapoorji Pallonji Group, which owns an 18% equity stake in Tata Sons, is seeking an exit, and IPO is one of the options. But Tata Sons had a September 30 deadline, and it missed that deadline, which was set by the RBI 3 years back. It gave Tata Sons a 3-year time frame to list his shares, and on September 30 was the deadline, and they missed that. So the future course of the listing of Tata Sons would be something that could come up at the board meeting of Tata Trust. The situation at Tata Trust aggravated last month when Vijay Singh, a director of Tata Sons, and he's a trustee on the Tata Trust board, he abruptly resigned, and that brought to fore the infighting in the trust.
All right, so thanks Anurag for taking us through all those details. But yet another story from the House of Tata. Now, TCS reported its quarterly results yesterday, and it's been a healthy quarter for TCS. Revenue and profit, they've both been a bit as per compared to our estimates, whereas EBIT margin, that was also in line. If you take a look at numbers, revenue has come in at 65,799 crore rupees. That's an uptick of nearly 4%, that is 3.7% to be precise on a sequential basis. PAT, that has also seen an uptick that has come in at 12,075 crore rupees. That's an uptick of about 5.4% on a sequential basis, whereas the EBIT margin, that has also come in at 25.2% versus 24.5% in the previous quarter. So that's an uptick of about 72 basis points compared to the previous quarter. If you take a look at EBIT, that has come in at 16,565 crore rupees. That's up about 6.8%, nearly 7% on a sequential basis. So yes, a pretty good number coming from TCS. In fact, the company has also announced a dividend of 11 rupees per share. Now, apart from that, the Q2 total contract value, that has come in at a great number of $10 billion. And if we take a look at how this compares to the sequential trend, it's a growth of about 0.8% in constant currency terms. If we talk about some of the other highlights, of course, the result is impacted by an exceptional item worth about 1,135 crore rupees. This was due to restructuring expenses that the company witnessed. Other than that, there's also that the board has approved acquisition of List Engage. That's another platform. And yes, the total contract value, like I said, that has come in at $10 billion. This compares to $9.4 billion in the previous quarter. So yes, that's about TCS earnings for the second quarter of FY26. So Srishti, a pretty good, healthy number coming in for TCS. Now let's see how the stock reacts to it, and in fact, the entire IT pack.
Indeed, Kanishka, and all these brokerages have actually gone ahead and come up with the target price hike as well, majority of them. But time now to slip into a very short break. We'll be right back. Welcome back to Market Cafe right here on ET Now, and let's talk about Titan, as the company has launched lightweight jewelry to offset the rising gold prices. Those are the words coming in from Titan Jewelry's business CEO Ashok Chawla. In the latest edition of the interview, Titan is betting on lightweight designs, new alloys, exchange offers and flexible pricing to keep the buyers engaged. Chawla believes festive as well as the wedding demand will bring and ensure that Titan's growth sparkle continues.
We have been working a lot on lightweight jewelry, reducing the grammage as much as we can. We've done a lot of interventions there, whether it's design re-engineering, product re-engineering. We've even come out with a gold alloy in 22 carat, which gives you, more hardness, so you are able to reduce the gauge. We have also launched 18 carat gold jewelry, which we are seeing good response to. In studded, instead of 18, we have started doing 14 carat, so you bring the price points down. So we tend to offer best gold rate options for customers, especially ahead of a festive season. Between non-Tanishq gold exchange and Tanishq, we are around 45 to 48%. So if we can get to, every year if we can add 3-4 percentage points, 5 percentage points, maybe, who knows, in 10 years' time we could get somewhere.
All right, then moving on, Atul Suri of Marathon PMS Trends has described Nifty as dull. Listen in as he explained his rationale behind it. Take a look.
Last 1 year, the index is where it is, Aisha. So you may say that's fine if the index is where it is, but actually many of the stocks are lower, honestly. Okay, that's also fine. But the fact is that when I feel left out is when I look at global markets. It's like, as I said, every morning you wake up, you look at your phone, Dow is up, Nasdaq is up 1.5%, blah, blah, blah. And you have that glimmer of hope, ke chalo yaar. and then when you see flat openings. And then the market is moving in 20 points up and down. So to some extent, the whole year has gone by, and I feel very, very left out because, you know, the way global markets have done.
All right, but with this, viewers, it's time to wrap this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team who put the show together. Thank you so much for tuning in.